Well, hello everybody, and you are very welcome indeed to this episode of the ESG and Tech Show. My name is Susan Hayes Cullerton, and I'm really delighted to be here with you today for our first show of the year. So, for those of you who may not know who I am the presenter of Fantastic Female Fridays right here at VectorVest, and that is a show that is dedicated to giving amazing women some platform so that they can talk to lots and lots of our many subscribers right around the world about issues that are related to do with women in investing. And of course today, as you'll see here, I'm also the presenter of the ESG and Tech Show, and particularly the reason that we began the ESG and Tech Show is I believe that these two are the two biggest trends possible that we are going to see that are underpinning everything that is going on in the economy and the world and society over the next decade. So today we have what I feel is a very interesting episode coming up for you. So we're going to look at 5 trends arising from generational differences with ESG and tech. So I'm going to take you through a variety of things that are happening out there that are affecting the different generations differently. And from there, what we're also going to do then is we're going to take a look at a variety of stocks that are either at the center of this or should be taking a look at how these things are changing. And it's certainly something to watch to see how the variety of companies that we are looking at, how they are reacting to this. Now, I do want to say that today there is something for everybody. So if you're interested in Millennials or Gen Z or maybe Gen Y or baby boomers, no matter who, we are going to be talking about a trend that is affecting each and every one of those generations. And of course also, you may not be familiar with all those terms, so I'm going to introduce you to those as well. Now, as I always love to do, can I please get a sense of where everybody is coming from today? Because I know all of you that are joining me here right now are joining me live. And of course, if you are tuning in from a different time when you can see this video here on YouTube, then of course, please do put it in the comments as well, because I'll always love to get a sense of where people are joining from. Now, I'm watching the episode up here on my YouTube on my phone, because of course here on the laptop, I'm here with you. So if you're joining on a phone, if you click here on live chat underneath the video itself, when you pop over there, you will be able to see the chat as it's happening. So first of all, Terry is here. Howdy from Texas. Hello, Terry. Craig is here. G'day from down under. Brilliant. Delighted to have you here. Then we also have Tommy, who's joining us from New York. That's super to see there, Tommy. You're super welcome. And like I say, pop your location in there. Patrick, I see he's joining us from Belgium. You're very welcome indeed, Patrick. And like I say, pop them in there. I'm only delighted to hear where you are, and I will give you a shout out as well. Now, what today is going to be focusing on is we're going to take a look at some ESG trends. So where we're seeing the future of ESG going and who is putting their money behind it. And then we're also going to look at some tech trends, and we're going to see who is using these types of technologies more, but more importantly, why. I can see here Bill is joining us from Missouri. You're very welcome indeed, Bill. Jeff, you're joining us from Phoenix, Arizona. You're very welcome indeed, Jeff, as well. And as I say, each and every one of you who's joining us from any part of the world, you are very welcome. Now, what I thought I would do today is that I would start off today by showing you or putting together a watch list of stocks that we're going to talk about as we go through the episode, and then we can refer back to this watch list from time to time. So what I'm going to do is I'm going to move my screen over here to our watch list. So let me just move my screen over there, and as I say, please do, anyone who's just joining us, please do tell us there in the chat where you are joining from. It's always great to see where our audience is coming from. So I'm going to pop on over here, and I'm going to create a watch list. Okay, I'm going to go down here to watch list viewer, and I'm going to create a watch list up here, and I'm going to create this as the ESG and Tech Show generational watch list. Okay, so that's how I'm going to do it, and I'm going to press add, and then here we are. Okay, so a couple of the stocks I'm going to talk to you about today. Appian is one that I'm going to talk to you about, APN. Okay. I'm going to talk to you about Salesforce. Salesforce is another one that we are going to that is another one we're going to talk through. Then I'm also going to take you through Meta. I have to almost do that. Sorry, Salesforce here. Okay. Oh, there we go. Salesforce can't be found. Of course it can't be found. And that is, now, there we go. So Salesforce. That is another one that we are going to be talking about today. Meta is going to be another one we're going to talk about today. NVIDIA. Okay, NVIDIA is another one we're going to be talking about today. NVIDIA. Sony is another one we are going to talk about today. Sony. Okay, you can see the markets are really taking a tough time, as a lot of these stocks have got sell recommendations, but I'm going to talk you through how to navigate all of that, and I'm also going to show you as well KLD. Yeah, okay, great stuff. We've got that in there too. Lovely. Yeah, lovely indeed. Okay, so I'm going to take you through those various stocks, and then we're also going to show you also a variety of others too. So as you are joining us here today, like I say, we're going to be talking about all of these. Right, let's first of all have a conversation here ourselves. Now, in the chat there, it would be really great to hear from you. Let's just hear directly from you what you think the big differences between the generations are. Okay, so when it comes to sustainability and technology, what do you think the big differences between the generations are? Pop them there into the chat, and let's just see and test these against the research that I've done. Sustainability and ESG, what's the difference between the two? Well, sustainability is this big broad term that refers to all of the things that might happen around the environment and around maybe the ability for a company to live long into the future. It can refer to biodiversity. It can refer to gender pay gaps. It can refer to diversity and inclusion. It can be a range of those different things. But ESG is a much narrower focus. ESG is environmental, social, and governance. Specifically, those three metrics that we would apply to looking at, for example, in the case of the stock market, a specific stock. So we might say, okay, well, we want to look at the ESG characteristics of, let's say, Sony, or what we would like to do is we'd like to take a look at the ESG characteristics of a specific stock, a specific ETF. So we'd like to look at an exchange traded fund and see how well it ranks from an ESG point of view. So ESG refers to metrics in particular, a lens through which you might look at a stock or an ETF. Now, so far, it's interesting. I haven't seen anything in here yet in the chat about the differences that you see between the generations when it comes to sustainability and technology. So let me start introducing you to them then. Okay, so first of all, I am going to take you over here to a Forbes article, and I want to show you, where I just want to show you one particular piece on this. There it is right here, and let me open this right up over here for you. Right, so let's move on over here. Now, one of the themes that I'm going to talk to you about that I feel is a really big trend, and I'm part of the trend because I use the trend quite a lot, is low code or no code. Low code or no code. So no code is when you can build apps without being a coder, of which I am not a coder. I'm not a coder at all. But when you actually can build apps, when you can build applications or you can build workflows without needing any code at all, that can be hugely helpful in the working world today. And this is something that is growing and growing and growing and growing. We're seeing quite a lot of it from both demand and supply. We are seeing providers of low code and no code apps, or low code and no code technology. We're seeing providers who are able to do that. And we're seeing that this is being taken up quite a lot by businesses who are making this happen. So just want to show you here this particular piece. As expectations evolve rapidly, research has found that Gen Z is putting a greater emphasis on workplace flexibility and work-life balance. Given this scenario, the ability to work easily and efficiently is critical on attracting, motivating and retaining early in career workers. They don't want to use old school technology that slows them down. They want to use new school technology that keeps them connected, efficient and as productive as possible. Now, I am that person. I want absolutely to do, as this next piece here says, how can I automate the boring or repetitive or tedious parts of my job away. How can I do that? And that is exactly what low code or no code can do. So I'm going to give you an example of how this works, right? I'm going to give you an example of a low code or no code platform. And then what I'll do is I'm going to show you two stocks that are investing in this, and let's take a look at how they're doing. Okay, one of them is Bubble, bubble.io, okay, bubble.io. This is an example of a no code or low code app. Now this was, I used this a long time ago when I was first trying to figure out how we could build and reverse engineer certain aspects of workflows. So in here, in the case of Bubble, you can actually build an app. So I can log in here and I am just going to get there into my password. Okay, let me just log in here, okay. And what I can do is I can simply build on Bubble. Okay, so I'm going to build here on Bubble. Okay, so I'm going to create a new app down here, and I'm going to call this test app. Okay, and it's going to ask me a range of other questions there, like what am I kind of building? So I can build a marketplace, and I can build all these sorts of things. And right, so I'm just going to create a new app here. It's customer facing. I'm going to say my goal is to start a business. I'm going to create a new app. And okay, so this is already taken, and I'm going to try 1, 2, 3, 4. Create a new app now, and that is also already taken. Okay, VV. And now I'm going to create a new app. So the hardest part, as you can see here, is creating an actual username here. But as you'll see when we get in here, what you can do now is I can, with different plug and play, different elements, I can, okay, I don't want that. No, thank you. And I have got boilerplate and I have UI elements and buttons and actions. But look over here. Look over here with my own ideas in here. I can build a workflow. I can link this back to a database in the back end. I can put plugins and I can put data and I can put various different styles in here. And all I need to do then is simply build it according to what I want. Whether I want video, HTML, that would be low code, for example, or shapes or images or links or maps, or also groups, repeating groups, pop-ups. The thing is that I can really build something that I can use then to test with my users and test and pivot and learn very, very simply. So I don't have to know anything though. That's the key thing, is that I don't have to know anything. And there are also boilerplates in there as well of templates that I can build off. Now I remember trying to build something back maybe 5 years ago where I wanted to test out a marketplace for knowledge. And I built the first version of this in Bubble without any cost and also without any training in coding. These types of low code platforms are absolutely gaining huge momentum. In fact, Gartner predicts that by 2024, 65% of app development will all be done by low code. 65%. So you think about all the computer science graduates, because we haven't got enough of them. Think about all the data and data interface providers. Think of all the careers that are UX and UI. So that would be user experience and user interface. Think of all those people. They all have to be highly, highly, highly skilled. In my case, I don't. What I need to be able to do is understand what I'm saying to them and to understand how to create a vision in my mind, take the vision out of my mind, and put it onto an app, and then off we go. So if you're going to take a look then, for example, take a look at Microsoft low code, right? They're down here. This is a low code development platform that Microsoft have in here now to power up certain apps. If I was to take, there are just so many out there. And here, to the point of where the Motley Fool here talks about why low code is at an inflection point. So it says over here, software stocks were big winners during the pandemic as businesses, large and small, realised the need to accelerate their digital transformation. In the process, many embrace low-code software, which allows for applications to be quickly deployed with little or no code. The other thing is that we all know is that when you're creating platforms for people to use, let's say like Facebook, let's say like the Internet of Things, when you're looking at technology like that, it can be very expensive to build code and then after that then change it as a result of what users want. Instead, build a low code option, test, pivot, learn, change your buttons, change things around, test. And when you have your testing done, then give all of that back to the coders who can then build a more robust solution. So that's why I think low code is something that is really, really interesting. It's very, very interesting to watch. And if we go on down here, I just want to particularly point out the remainder of this piece here on Forbes is they say, what better way to address this than by giving employees the power to automate away the most tedious parts of their day. And this in particular is referring back to the great resignation that we can see happening right across the labour market spectrum. But by enabling employees to be able to automate certain parts of their workflows, this can be so helpful, super helpful. And then you can also see here that by being able to think through workflows and processes, by being able to think through that way, somebody can make themselves much more employable. I'm also going to show you another app as well, similar to this one, or sorry, very different, sorry. But the whole idea of low code for a different purpose. Bubble, what I showed you here, Bubble is a way to build an app so that I might use it to test it out with my users. But instead, let me take you to another idea. How can I automate my workflows? So how can I make two different tools speak to each other? How can I do that? So one, for example, that I'm going to show you here is Zapier. And Zapier is a super tool, again, to automate your work. So what you can do is you can connect your apps and then automate your workflows. So let me give you an example. And for those of you who've been here with me before, you might have heard me share this example before, but it's a really, in my opinion, it's a great one to point out exactly how this can work. We were running a webinar here at VectorVest and we were running it with a partner. So the partner that we were working with was collecting the details of people who wanted to sign up for our webinar. It was an organisation in Belgium, and as they collected the details, what they needed us to do then was we needed to register them on our webinar platform. So you're taking data, you're taking an Excel spreadsheet of names and email addresses and consent, and then we had to upload them into our webinar technology. Now, at the time, our webinar technology, you couldn't mass import these, right? You couldn't actually import these directly in from a spreadsheet. So this was going to be a really arduous task of taking every single, hundreds of people who had signed up for the webinar and then registering them one by one in for this webinar. So instead what we did was we used Zapier. And what we basically did was we told Zapier to connect two tools together. We said, when you see a name appearing on a Google Sheet, automatically then register it using the webinar technology that we had. So we basically use Zapier to connect the two tools together. So when you have a look over here, here's popular ways to use Zapier, for example, right? So for example here, you can build connectivity between, say, Google Sheets and Slack. So Slack is what we use in our own team here. By the way, I'm also managing director of VectorVest Europe at VectorVest. So we have a team here in Europe where all we do, our communication, primarily when we're emailing, we don't email each other, we use Slack instead. So let's say Google Sheets and Slack work together, where you can make Airtable, which is a database management tool that we use for testing out different ideas. You can connect Airtable, let's say, in with Google Sheets and then connect that in with Gmail. And it just means that you don't have to do one thing after the other. You can connect workflows. So both of those are very big trends, but particularly they're very attractive to Gen Z. And you might say, okay, but why aren't baby boomers or Gen Y interested in this? They are. But the thing is that Gen Z grew up with this idea. And Gen Z in particular are very focused on, like you see here, staying connected, efficient and productive. And because we've seen an awful lot of maybe app development in schools, or low coding in schools, or where also we see, for example, like in my case, do you remember when we used to actually say, I'm just looking here, I see a comment coming in and I'm going to come back to you on that. Do you remember when we used to save things on hard drives as backups. Do you remember when we used to do that? And do you remember when people in cybersecurity used to tell us, if you want to save your backup, you should be saving it at least far more often than once a week. So everything that was on my laptop, I used to say, right, this needs to go onto a hard drive. There is no way I do that anymore. I have a constant backup running of my data all the time. In fact, anything that's saved here onto the laptop is automatically synced, S-Y-N-C-E-D, synced to the cloud. So as a result, the idea of losing something, if anything happened to this physical device, is gone away. It's absolutely gone away. Think about, do you remember when we used to email each other spreadsheets and Word documents and PowerPoint slides and say, will you update it and send it back to me? That day is gone. Now we do all these things collaboratively at the same time. So that's the thing, is that Gen Z grew up with this idea of working collaboratively and of being able to get embed codes and share links and having things operating at the same time. So that is my first one. Before I go over to the stocks then, around this area, I just want to come back to a comment. Is the frequency of use, meaning once you create something that works, maybe a year later you need to modify it or a new one. Very good point. Very, very, very good point. So can I take that idea and let's look at the business model. Let's look at the business model behind these. So in the case of Bubble, right, I'm just going to go over here to Bubble.io pricing, because you're right. You're right, Jem. You are totally right. But let's take a look at the pricing. Is the pricing based on what I build? Well, actually, the pricing instead is based on pay as you grow. So it depends on the actual features that you want embedded right here within this. So if you want, I'm going to compare plans down here. So this is actually, it depends on how many users you're going to have and how much you're going to use of it. So if you build an app, it's not just, one and done. You're actually paying for the amount of data that you're going to have, the data backup and the restoration that you're going to have. It's as you grow, you pay more. So it's not just about using these once, it's about using them and deploying them and then take it from there. Similarly, Zapier, the more integrations I build, which as you say, if I build once, the more integrations that I build, let's look at the pricing here, then the more times, of course, that it's going to be used. The more times that it's going to be used, then we can see over here, for example, if I want to get unlimited Zaps, I'm going to be paying $43.99 a month. And that's euros, of course. I can change this to dollars too. So then that changes from 2,000 tasks a month. If I have 10,000 tasks a month, that changes. And of course, then you also have your various different type of people, your various different admins who'd use it as well. So the business models of these low-code platforms are actually focusing on them being used and deployed at scale, which is the whole point. I can see we've loads more people who've just joined us, so you're very, very welcome. And if you could tell us where you're joining in from, please do tell us there, pop it there into the chat, what part of the world you're joining from. I always love, as I said earlier to people, to see where people are joining us from. Now, can I also say though, because I'm now going to show you the stocks involved in these two areas, or in this area, can I now ask you to tell me, do you see how, or do you use any low code apps yet yourself? Now, I'm just showing you two. We also use ClickUp. So we also have built workflows into those. A lot of the apps that we use now have got integrations built into them, like you can see there in Zapier. So we use loads of them. But I'd be very interested to see what low code do you use when it comes to the possibilities that you have. So tell me there in the chat. While we do that, I'm going to say hello to Prague. You're joining us here from Phoenix. Shabir joining us from Toronto. So does Marty. Chopper is joining us from Cambridge. Holmes, you're joining us from Tennessee. Ali, you are joining us from Edinburgh. Donald is joining us from Western Canada. You're all, as I say, super, super welcome, and please do get involved in the conversation. This was the first trend that I wanted to talk about today. Power apps, Prague. You're right. Power apps, definitely, they're used a huge amount, and they can be embedded into anything. PB is joining us from Belgium. Johan from Belgium. Craig, you use Microsoft Power Platform. Tell us about that one. Microsoft Power Platform. Microsoft Power Platform. Okay, Microsoft Power Platform over here. Okay, this is the sum of its parts. Analyze data, build solution, automate processes, create virtual agents. That's brilliant. Yes, exactly. The whole idea of how these things are just all wedded in together and the possibilities of how you can dramatically cut time is so helpful. Who else have we got here? Brian is joining us from Vancouver. Tyler from Victoria. Andrew is joining us from Calgary as well in Alberta. Dimitri is joining us from New York City. Yes, so please, anybody else have any other apps that you want to mention to us? And while you're doing that, let's pop on over here and let's take a look at the program. Because what of course we have seen is, because this is the ESG and Tech Show, of course I'm going to talk about technology and those technology stocks. But I want to take you through two companies in particular. So one here is Appian. Okay, so Appian has been one of the leaders in low code. The problem is, of course, if we just going to take a look over here at Appian, you can see here that this stock has been a sell recommendation for quite some time. And also, I'm going to take off its relative safety here. Yeah, I'm going to take this off. I'm going to go up here to its earnings per share. Okay, and you can see that. So earnings per share, let's change the type over here to change style. And I'm going to change the style here to being much stronger. Now, here we are. Okay. So as you can see here, now I need to have a power up app here myself. As I can see, one of the devices that I'm using right now is starting to run out of steam. And of course, we don't want to have that, particularly since that's the one that I'm using to make sure that I hear from you. Who else have we got here? Yamaninder is, hello, you're D from Toronto. You're very welcome indeed. So the thing is that technology stocks are really getting hammered here. So as you can see, this stock was up as far as $235 a share. It's fallen by 5 times on the way down. And that's why looking at the business model of these stocks is what's really important. On the other hand, let me take you through Salesforce. Let me take you through Salesforce, okay? And we take you through Salesforce. Haha. Now, when you see what's been going on here with Salesforce, you can look at that earnings per share. Now, and I know you can't quite see it there based on my picture, but you can see here that when the earnings have been rising, naturally enough, then you can also see the stocks doing the same. So this stock price here was at $221 at this time last year. Whereas by now it is up at its height, it went up to $309. Hello, Frank, you're very welcome. Thank you for joining us here for Belgium. So you can see that it's gone up all the way up there since then. Now, since then, it has been given a sell recommendation as the stock has now broken its stop loss. But what I would be inclined to say is that it is it is very worthwhile keeping an eye on stocks like this. Keeping an eye, because Salesforce is a beast. It's a beast of an entity that can enable exactly the type of things that I'm talking about. A lot of tech stocks are really getting hit hard since the beginning of the year. So what I'm doing is I'm keeping an eye on the companies that enable low code and enable platforms like Microsoft. I also want to pull up Microsoft, that are enabling MSFT here, people to build their own apps within them and also within a marketplace. Okay, where Microsoft are you gone? Salesforce, maybe you're down here at the bottom, are you? Yeah, there we go. So there you can see again in Microsoft's case, lovely graph, absolutely lovely graph. Starts at the bottom left and moving up to the top right in terms of its earnings. Now its relative value is actually the highest of the 3 that I've given you so far. Its relative value is at 1.29, and 1.29 is the stock's ability to withstand severe and or lengthy price decline. Sorry, it's not. Relative value is its long-term price appreciation potential. I was going to talk to you there about something else. So the relative value here is higher at 1.29, and this again is a company that is just the ability of Microsoft to enable people to customize their own low code, whilst having the architecture and the distribution of the type of companies that it has, whilst also levering its cloud services, is immense. So we can see over here that it has bounced off its sell recommendation. It's bounced off that. The stock is up quite significantly there now today. And again, like I say, the stock market is quite negative at the moment on tech stocks. So that's the time to be really watching out for the sector. The PE ratio of Microsoft is at the moment it's at 32.61, and if we take a look at the PE ratio, you can see that it has fallen quite a bit. Now I just want to make that line stronger. Change the style over here to stronger. Okay. Now, there you go. You can see that the PE ratio has been falling, which means the value of this stock has actually been rising over the past while. I'm going to zoom back out there now so you can see a full year's graph. There we go. You can see a full year's graph there. So that is one. You can see the PE ratio has been, it's never been major, like not Facebook Meta high, but it is something, it's certainly a stock to watch because its ability to generate revenue and specifically profit is amazing. Okay. Now, let's just see what you're saying here. Craig says CRM was one of the first examples of SaaS in the cloud. Just in case you're not familiar with the term SaaS refers to software as a service. So that's what that is. And Craig, you're absolutely right. Salesforce it's such a big tool to enable automation within companies. It really is. Daisy says, joining us from Savannah, Georgia. You are very welcome. And Craig also mentioned that Microsoft just announced its earnings. Yes, it did. And again, its ability is phenomenal. Okay, that was the first one I wanted to talk to you about. Now, let's move from technology across to ESG. And I'm going to bring you over here to my second key trend. And this is up here. It's based on the FT Advisor, Financial Times Advisor. And what this question is asking is, how should advisors approach ESG with different generations? Now, I'll tell you what I particularly thought was very interesting about this. And please do keep your comments coming in here. As I say, if you're interested in those tech platforms, I'd love to hear how. Look at this, right? Look at these numbers, right? Look at these numbers. According to Morningstar, ESG funds attracted inflows of 233 billion euros or 200 billion pounds during 2020, almost double the figure of that of 2019. Double! Like, how many times do we see doubling happening in the market? This is the reason, of course, that I have a show like this, is so to show people exactly how big this area is, but how to navigate you through it. The first quarter of 2021 has seen a further inflow of a staggering 120 billion, okay, so that was 120 billion, representing 51% of overall European fund flows. This is the size of the market, right? And I'm going to take you through some newer trends, but I just want to point out these are really, really, really big numbers, And down here, you can also see the scope of growth there is here, because recent Agion research found that 95% of people say they recycle, 59% avoid single-use plastics, but yet only 15% note ESG investing as a way they're actively supporting a sustainable society, but want to. So I think that this is a really, really big approach here. Hi Rod, you're very welcome. You're joining us here from Atlanta, Georgia. Super welcome indeed. Now, my question to you is, who is doing the investing? Who are the people out there? Which generations out there? Who are the people that are participating in ESG investing? And I have the answers, and that's why you should be on the show every time we have it. Now, Tommy asks, what does ESG stand for? ESG stands for E is for environmental, S is for social, G is for governance. It's a way in which to look at the ability of a company to be sustainable through three metrics: environment, social, and governance. Environment, for example, could be their carbon neutrality. Social might be their diversity strategy, and governance is, of course, how well they're run, and their audit, their audit scores, or the independence of the compensation committee, etc. And the more ESG, the better the ESG rating a company is, then the more sustainable it's likely to be. The thing is, though, Tommy, and I'm glad you asked that. And again, everybody else, please do put your questions in as we go. The thing is, though, Tommy, is that we used to think before that if you invest in companies that are sustainable, they're less likely to do well financially as well. That is totally not the case at all anymore. Instead, the likelihood is that if they have a positive impact on the environment, and on top of that, they also have they have got a good social strategy to take care of their staff, and they're run well, the likelihood is that they're actually going to do very well economically as well. Now, Theo asks about MA. Okay, let me just add here. So there we are. Now MasterCard wouldn't, do you know what I'm going to do actually? In your case, Theo, I am going to talk to you about MasterCard in a little while when we talk about another one of our five trends. Okay, who else have we got here? You're very welcome, Tommy. Tony says he is joining from Hawaii. You're very welcome indeed, Tony. Right, so who is investing in ESG? That is the question. Who is investing in ESG? And let me bring you on over here. There we go. Here's your answer. So I got this from Value Penguin, is that 27% of advisors say that clients of all ages and wealth levels are interested in ESG investing. Right, for a start, which is a reason, like I say, that we have this show dedicated to the theme. 32% of baby boomers and 22% of millennials plan to invest in ESG funds over the next 2 years. Does that mean there's going to be more baby boomers interested in this area? Well, not necessarily. It's just a lot of millennials are there already. 61% of billionaires are planning ESG investment versus 34% of average investors. I had to smile at this and I thought, if I'm not a billionaire, does that make me average? But anyway, they're planning it, and 34% of investors are considering social purpose when selecting firms. Now, that's not just, social purpose would be wider than ESG. Social purpose could be ethical investments, or it could mean green investments, whereas ESG is a specific way of actually measuring. Now, let me take a look over here. Craig says, anyone who recognises that we are custodians of the planet, regardless of generation. Now, Craig, that was interesting, right? It's an interesting point you raise, and I'll tell you why. Is because there is a hypothesis out there that has been tested, and I just don't like it. But there is a hypothesis out there that the younger that we are, so when you're talking about your Gen Z, for example, or millennials, the longer the time they have on the planet, and thus the more invested they are in this area. There's also another hypothesis that the closer you are to retirement, the less focused you might be on ESG, and the more focused you might be on income particularly. And so therefore, the closer you are to retirement, the closer you are to tangibly getting, let's say, your retirement portfolio, the more focused you're going to be on returns first and sustainability second, and you don't really have the time to put the two together. Terry says, does VectorVest have a watch list that is a list of companies that qualify as ESG companies? Now, Terry, let me just clarify something on this. It's not that a company qualifies for ESG, because every company has an ESG rating, and there's lots of different data providers that do that. So I'm going to give you an example for a moment over here, right? And Rod says he loves his show. That he loves the show. Delighted to hear that, Rod. Thank you. For example, here we go. iShares. Let me show you here an ETF, right? I'm going to pop over here, and I'm going to go down here to America. Okay. And in here, I am then going to go to view all funds. Okay. And when I go down here, I'm going to look here at the S&P 500, right? Probably the one you're most familiar with. In here, I go to S&P 500 ETF, and I'm going to scroll on down here. Scroll. And here, there you go. This has an ESG rating. So it's not the fact that it qualifies as an ESG ETF. It has an ESG rating, which is pretty high. By the way, it's AA, and this is from MSCI. Then its ESG quality score is 6.6. And it covers, the ESG ratings cover 99.26% of the portfolio. Whereas the MSCI ESG quality score of the peer percentile is that it's roundabout in the middle. Now, would it be any surprise to you then if I was to show you a sustainable ETF? So I'm now going to scroll on down here, scroll. I'm going to go in here into the US. Let me just scroll here, and I'm going to show you instead view all funds, and now I'm going to find an ETF for you that is totally focused on being sustainable. Broad ESG. Okay, this time I'm going to pick the same market, which is the US, but this time it's going to have an ESG focus. Okay, click here on this, scroll. And down here then you can see it's AAA rated. The quality score is 8.7. The peer percentile is much higher at 95.43%. So that is what ESG is that it's a way to compare ETFs and stocks, etc. But that's just, comparing an apples to apples approach. So there you go. So Tommy says, does companies have an ESG rating in VectorVest? Not at the moment, Tommy. But we want, of course, to bridge the gap by having a show like this to take you through how to analyze stocks and ETFs yourselves along the way. Okay, so this is the point, is that the differences is that there's a lot of millennials in here already. Baby boomers are soon to be following them. And this is the point, is that, but 27% of advisors say that clients of all ages and wealth levels are interested in investing. So this is the second one. The second key trend that I wanted to show you is this is a growth area, but specifically there is a difference between the generations as regards who's more interested in increasing their allocation than others. Okay, now our next trend number, before I go on, I did want to point out to you, and maybe actually this, who am I answering here? Terry, maybe this comes back to a point that you wanted to mention, is have we got a list of stocks that are ESG focused? Let me just bring you over here. And I want to show you this here. So this here, sorry, I've gone to the wrong scene. I want to bring you over here to my screen. Over here to my screen. Okay, over here. So I'm going to right click here and let's view full stock analysis report. This is, for example, an ETF this is probably the most common or the oldest ETF that you might come across when it comes to ESG investing. So this is the iShares KLD 400. So the largest 400 large companies that are ranked in terms of their ESG metrics. Okay, and what this does is it tracks stocks of companies that are within the IMI index and are determined to have positive ESG characteristics. And then, as you can see, you can take the VectorVest indicators and apply them in this way. Okay, so for example here, I can see the valuation. I can see that it's 85.57. Then if I move on down here, I can see that its RT here is at 0.97, which is fair at the moment. I can see its comfort index is beautiful. It's beautiful. It has an excellent comfort index. And the comfort index is the a stock's ability to withstand severe and or lengthy price declines. Then I can go down here and I can see its P. Let me go down here. I want to see it. Does it have a dividend? Yes, it does, of 92 cents. And it's above, the yield is 1.07%. It's above the current average. So what you can do is, of any ESG ETF that you might be interested in. And by the way, I had a whole show on last year focusing on the fastest growing ESG ETFs as well. If I can maybe ask one of the guys there back at base, could you please share the link to the show, to the episode that we focused on the fastest growing ESG ETFs, please? That would be great. Thank you very much. So that is what I say that you can do. Now, Craig asks a great question. Craig says in here that has the pandemic increased awareness of ESG? Yes, it has, in different ways, right? But I'm going to give you one very concrete one. Let me bring it back here to my camera. Bring it back in here. Okay. Let me bring it back in here. By the way, Lucas says we can chat but nobody responds. I'm here watching the chat all the time. Believe me, I am responding and will do as things come along. Right. Has the pandemic affected the focus on ESG? Yes, it has, right? In a variety of ways. Naturally, with the pandemic, there was a huge decrease in air travel. We saw the impact that had on the environment. There was an increase in the amount of shipping that was done because of e-commerce. So we became more aware of the big changes that happened as a result of the pandemic on the environment, and also how we want to maintain and expand those. But I will give you one very important one, Craig, and that is what you saw a massive increase on was the sense of buying local. And I remember talking to you about this during the ESG and Tech Show last year, like one stock in particular that did. I'm just going to bring it up here. I'm going to pull up the graph here. I always say this incorrectly, right? Or you tell me I say it incorrectly anyway. And let me show you this stock over here. Let me just open it up. Yeah. I'm going to go back. I want to go through the full distance here of the pandemic. I want to bring the graph back. I'm going to share my screen very shortly. I just want to bring this back here to March 2020. March 2020. Yeah, There we go. And I want to bring it up. I'm going to say to the end of the year. I'm going to say right up to the end of the year here. July, August, September, October, November, December. Okay, yeah. Now, let me bring you over here then. Okay, let me bring you over here. This was a stock that really, I call it Etsy, some of you call it Etsy. This is a stock I spoke about, particularly in my show at the end of 2020. I spoke about this stock. Now, as of today, it's got a sell recommendation, but I just want to point out to you again, you can just see the growth. Look at the earnings, beautiful earnings per share here, beautiful earnings per share, growing. And this particularly was tying into the whole idea of shopping locally, shopping sustainably, shopping from small suppliers, etc. Now, who else have we got here? Jared says, thoughts on Nano Dimensions. Okay, let's see what we can do here on that, Jared, if we get time to look at that. Nano Dimensions. And Terry says, I get a good list of technology stocks from loading the top 25 stocks from Investor Business Daily, top 50 list of stocks, and then you put them in a watch list. Great idea, Terry. That's a very good idea. And then you can use VectorVest then to analyze them. Okay, let's move on over here now to my third trend. Okay, I'm going to move over here to my third trend, and this is one that I brought up to you. Theo also asked the BNGO. Okay, if I can at all, I get to those as we get to the end of the episode. So over here, I want to bring something up to you that I raised in my show, in my last ESG and tech show of the year, which was the trends that shaped 2021. And I think this is one that's very worthwhile looking at. And that is, if we take a look here at the millennial, right? Because I haven't spoken much about millennials yet. In fact, speaking of millennials, Tommy says, without knowing what ESG meant, my wife and I have always had an interest in that. I noticed with our 27-year-old daughter and her fiance is even more so. Exactly, Tommy. And that's the whole point. That's the trend that we're seeing. But it's very interesting to look at the millennial here. And as I say, we had a look at this in the last show, but I wanted to bring it back to you. Because the millennial, right, when you take a look at today's 26 to 39-year-olds, this is including your daughter now, Tommy. On the whole, right, when you look at 26 to 39-year-olds in 2019, they had higher net worth than those 26 to 39-year-olds in 1989. Now, of course, you might say, well, $1 in 2020 is very different to $1 in 1980, but these are inflation adjusted. So we see here that today the millennial is slightly better well off. Now, they do have more in income. They are making more, and they now have more financial assets, but they have much more debt. They have much more debt in terms of student debt. Now, why might that be? Well, the reality is that typically your millennial today has stayed in university longer than your 26 to 39-year-old back in 1989. So they have more likely invested for longer in their education, like a master's, maybe a second master's, also continuing professional education, professional exams. In my own case, for example, I am a CFA charter holder. I'm a chartered financial analyst. So I'm a CFA myself. And I did those exams after I finished college. After that, I did a diploma in tax and I did a master's in executive leadership around about the time I turned 30. So I am somebody now, thankfully, without the debt. But the point is that idea of staying invested in their location for longer is certainly making a difference. The other thing that I want to bring up to you, right there, you can see that point, is retirement and home ownership. It is true, millennials are less likely to own a home. 48% of 26 to 39-year-olds is lower than 52% in 1989, but house prices are an awful lot higher. The reality is too, though, is that millennials have been more likely to rent in urban areas, because that has been up until the pandemic anyway. That has been where the better opportunities have been for career progression. And then the other thing is assets. They are more likely to have a retirement account, since these savings vehicles are more common than traditional pensions used to be. So they are actually putting more money into specific vehicles. 86% of millennials have some kind of retirement plan, compared with 73% of boomers at that age. So it's taking them longer to get the things that people who are much older than them got. It's taking much longer to get homes. It's taking longer to pay off their debt. But that's because they're investing in their long-term capability for longer. Now, why I feel that this is something that is very worthwhile and interesting to watch is that millennials are very invested in ESG. Very, very invested in ESG. And we spoke about all that in the last episode, so I won't elaborate again. But very interested in ESG. And as a result, as they get more and more money, and as they are expanding, and the intergenerational transfer that is expected over the next 20 years is about $4 trillion. When you take that into consideration about these millennials taking that money, in fact, I'm going to get that for you. The intergenerational wealth transfer is about $4 trillion. I'm just going to say it's about $4 trillion over the next 20 years. Trillion. Yeah. There you go. And this is another piece there from Forbes that I came across. Is where is it down here? Okay. Baby boomers upon their death will transfer an estimated $30 to $68 trillion to adult children. But that is all of that generation. So I just want to make that point, is that we are talking about a huge amount of money then being, that money is going to be transferring in. And as that generation is focused on turning that money into assets, as they already have been, and also then putting those into ESG, that is where we see a really big change happening. Really, really, really big change happening. Now, let me go over here. Okay, so has the FIRE movement influenced younger generations in realizing time is what they have the most of? It's an interesting point there, Craig. Yeah, it is. It's an interesting point. What we often hear from younger generations is that what they value most is not the amount of money in their bank account, but instead the bank of experiences that they have. So you can certainly come across that. And also Tommy says, can't really compare debt. You probably mean, you probably mean debt without comparing differences in interest rates. You paid 10.3% when buying your house. Absolutely. That is a very, very big difference as well. Okay, now I'm going to move on to my fourth trend. And my fourth trend that I want to bring you to is e-commerce. Is e-commerce over here. Okay, so I'm now going to, if we move over here, I wanted particularly to look at the Instagram report. And the Instagram report here, this is particularly where we're going now down to Gen Z, because I know we've looked at baby boomers and we've looked at millennials. Just now I want to talk to you about Gen Z. So I think that this is interesting, particularly up here, is in 2022, nearly 1 in 4, 23% are expecting to thrift, in other words, secondhand, thrift more online through secondhand websites. About the same amount of teens and young adults are expecting to contribute more to clothing sustainability by selling their own goods through an online store or social media in 2022. Why I think this is interesting is this is how, if you're a teenager, this is how you can contribute to sustainability. As you get money, then the next thing that can happen is that then you can invest in ESG along the way. So we're going to see a huge drive in this direction as well as time goes on. And similarly, I also wanted to point out about social commerce. Social commerce is, social commerce. When nurturing Gen Z, it is important, while nurturing Gen Z is important for success in social channels, being social media, the top spenders of today is equally important. Baby boomers and Gen X are rarely considered the top audiences in social media. However, brands can be missing out here. Baby boomers are the biggest spenders in the US. Gen X is close behind. And of course, because the older you get, the likelihood is that you have more money through the impact of earning more, but also through the impact of time as well, growing the value of your investments. So the question then is, how or who is taking advantage of this all the more? So for Gen Z, 100% of centrals check their smartphone at least 5 times an hour. How often would all of you check your smartphone? I would say it's well 5 times an hour. And moreover, 7 out of 10 adults of representative of Generation Z do this every 2 minutes. Now, I'm not there, but I'm also not Gen Z either. 82% of Centennials are sure they are well versed in new technologies, back to the low code point. And since childhood, they hear about augmented reality, AI assistance, unmanned vehicles, and so it's harder to impress them. But a survey by the British agency Voxburner showed that 71% of Centennials and 58% of Millennials are interested in virtual reality, which is why I wanted to show you NVIDIA. So according to civic science research company, 28% of representatives of Gen Z are ready to buy virtual reality glasses, and over 19% are of Gen Y. So we are finding that Gen Z are more drawn to having these types of tools, these types of technologies, and of course buying through them as well. Social commerce is buying as a result of seeing something, let's say on Instagram, and swiping up, or alternatively buying directly through these types of portals as well. So when you take into consideration all of these types of things, what are we seeing here? We're seeing, first of all, that it's more likely that the younger generations are influenced by sustainability when they're making their purchases, and through doing so on social media. The second thing that we can clearly see here is that, of course, they not the people with the most money. The older generations are. They are the ones with the most money. But thirdly, we can see that those who are in between are also very likely to actually want to have their own tech tools and thus spend accordingly. So let me bring you over here now and let's take a look at NVIDIA before we look at our last trend. Okay. Okay, and over here. So I just want to show you here NVIDIA. Okay. No, that's Microsoft. Let me bring you back down here to NVIDIA. And then I'm going to, yeah, there we go. Here we go. There's NVIDIA. Where is NVIDIA? Yeah, there we go. So there you can see in the case there of NVIDIA doing a stock there focusing on semiconductors. And of course, the semiconductor shortage is pretty scary, all right, as you can imagine, for quite a number of organizations, including themselves, which is partly the reason that you're seeing a big fall off that's happening here right now. But NVIDIA has got a buy recommendation. Now, I'd keep an eye on it. I would keep an eye on it because we need to see what happens there. And I would be watching my RT, excuse me. I'd be watching my RT because RT at the moment for NVIDIA is at 1.54. So that's what I would be keeping a very close eye on this if it is a stock that you're interested in looking into. Back at the beginning of the year, it was a sell recommendation and then spent loads of time as a buy recommendation. This is a company that is really embedded into the changing nature of technology and is one that also is working a lot around blockchain and a variety of other things as well. So, but if you look at this stock here, the earnings moving from the bottom left down here up to the top right, the earnings back at that this time last year was 184. That has ballooned up to 516 at this stage. So it also, I remember when we were speaking at an event in Toronto, all of us, the VectorVest team, we were all out there, we were speaking, or we were working at the Money Show in Toronto, and this was Dr. DeLito's own stock pick himself. Now that must be 5 years at this stage. And over that period of time, NVIDIA has gone from a share price of $27 in 5 years to 10 times that. So this is something that is really worthwhile looking at. So I wanted to finish off today with my last trend, and my last trend really doubles down on virtual reality. And I wanted particularly to look at this. Before I get to that now, fully immersive experiences online is the metaverse. Yes, that's why I said, right, we had to look at it. Is that when you're looking at virtual reality, when you're doing that, you're also then going to have to factor into the equation is that Generation Y is watching content, Generation Z is creating it. Virtual reality is when you go into another world, basically. So by putting on, let's say, the glasses, by putting on the virtual reality glasses, I can then see a different environment. So if I was to put on my virtual reality glasses now, let's say, and I look out that door, then I look out here, is that I can't see the window that is over here on my right. Instead, what I can see is the world that is in my glasses. And I remember I was at a conference in Belfast in Northern Ireland back in October, and for example, I put on the virtual reality glasses, and I was actually flying the first plane with the Wright brothers, and that's cool. So I was actually sitting in the plane, and I was holding onto the joystick, and I was directing the plane in every direction that it needed to go, and it was fantastic. And then, of course, took off the glasses, and here I was back in Belfast in the year, at that stage, the year 2021, and it was just really, really cool. That is what virtual reality is, and that is something that is growing hugely. But in particular, what we're seeing is that also YouTube is a key platform for Generation Z, and the question is that will it just be in the future that you could just look at YouTube where you're just looking at it, or are you going to be surrounding yourself with these glasses? Now, of course, I have to talk about the metaverse, don't I? I simply have to talk about the metaverse. So the metaverse is, let me just get you an image of it. This is exactly, here we go. Here we go. So this is where you spend your time in another world, virtually in another world, through wearing glasses like this. And of course, Facebook is doubling down big time in it. Let's though pop on over here. Let me see here. Let me pop on over here to the VectorVest program, and let's take a look at Meta, M-E-T-A. Okay. Down here we can see Facebook. Meta, down here. Okay, back up one. Yeah, there we go. So there we can see, this is a 5-year graph here of Meta. Now again, like a lot of the tech stocks, they have been falling here quite significantly over the past while. It's gone from a high of $384 after dropping $80 a share. The earnings of Facebook are always eye-watering, in my opinion. They're always rising. And like, I mean, to have earnings per share here of $14.33. But what I also find can also be eye-watering is the PE ratio. Now, at the moment, it's only 21. It's not, certainly wouldn't be overly crazy at the moment. What I would do there is, if I'm watching this stock, if you are interested in buying Facebook at some stage, I would again watch the relative timing. Now the relative timing here, I just want to make this bigger and stronger so that you can see it better. So I'm going to right click here, and I'm going to change the type here to style, and I'm just going to make this a more solid line. And then I'm also going to take off things that I don't need right now. I'm going to take off the RV, for example. Take off RV. Yeah, RV, you can go. Thank you for your service. Okay. Now you can. What can I do here now? I'm going to detach this graph so that you can see it better, because I know I'm in the way. Okay. And I'm going to hide this in here. Right, now look here at the RT. Let me just zoom right in. This is what you need to be watching here, is the RT of Meta has dipped down under 1. That's a real warning sign. When it goes below 1, that means the sellers are winning the war. Now, it's easy to see that this has happened, isn't it? Clearly in the past month, it's easy to see that. But how do you know when the war is going in the opposite direction? And what I would say here is that what's very worthwhile is watching when the RT pops up over 1, and that's a good time then to consider possibly an entry position again if you're interested in all that Facebook and the metaverse is going to do. Now, okay, let me just see here what's going on about that everybody's saying here. So Adam says I would pass an Nvidia and most absolutely insane PE. And PE being price to earnings ratio and price to sales at this time. Okay, interesting point there, Adam. My first mortgage was 10%. 2 generations of young people just don't get rates. Should be between 3 to 5% minimum, and 30-year of 5 to 7%, which is still cheap. Markets are finally adjusting, thank God. Well, we'll see how that goes. Of course, the Fed is looking at 4 interest rate increases this year, so let's take a look at that. Maria says, bought Nvidia in November at 194 and sold on the 13th of January at 270. Well done, Maria. Adam says, as wonderful as VectorVest is, I can't get on board with Metaverse. It's just respectively dumb, lol. Well, I have to say, VectorVest at the moment isn't going to be living in the metaverse anytime soon, but you never know. And I see there Maria is sharing some emojis, and she also made some good profit on Meta too. Very good to see. Theo asked, will Ford go up? Okay, I'm going to answer this and then I'm going to stop because I'm just about over, well, I'm over time now. If I pop on over here and let me take a look at your question about Ford, I'm going to answer. I'm just going to go over here to my stock viewer. My stock viewer. Let me just open this up here and let's put in Ford. And let me just analyze Ford for you right now, which I can do, of course, because it's quick, easy to do it. Right, the value of Ford is higher. It's 25.97 in comparison to the price, 20% higher, in fact. And it looks like it's having good long-term price appreciation potential. And let me just look at one other thing. What is the RT doing? The RT is at 0.77, which isn't very encouraging. If I was interested in buying Ford fundamentally, I would wait until the RT rises above 1. That is what I would do, and then I would check it out again. Hope that's helpful there to you, Theo. So on that note, ladies and indeed gentlemen, thank you very much for being here. Now, we got a couple of things to do before we wrap up today. Number one, can I ask, are you on the mailing list for this show? Because I'm going to be sending you out an article afterwards documenting the major trends in my sources. Are you on the mailing list? The mailing list is vectorvest.com/FFF, 3 Fs. Again, there I might just ask the guys, the support team there back in the US, if you could please pop that link there into the chat. So vectorvest.com/FFF. That is the mailing list for the content that I am sending out directly to people, where we're announcing the various different shows that are coming up, etc. Okay, the second thing I'm going to ask is, can you please like this video if you like the content? It's helpful so that then other people can find it. So if you're on a mobile, if you X out of the chat and pop on over there then to like, we would really appreciate that as well. And the third thing I want to tell you is that our next episode of Fantastic Female Fridays, of which men of course are welcome. My platform is to give people the possibility to share their story and to talk about what can be interesting to investors. So that is the purpose of the show. It is not to be exclusionary at all, but I will always have women guests on. And so our next episode is on the 18th of February, and you are going to meet an amazing woman called Celeste Headley. Her TED Talk has had 12 million views. Honestly, we're so lucky to have her. So if we could, like I say, please do join the mailing list to make sure that you get the follow-up resources based on what I'm going to talk about today. You can do that at vectorvest.com/FFF. Second thing is, please like the video. And thirdly is, I'm going to see you for the next episode of my own show, Fantastic Female Fridays, on the 18th of February. Okay, everyone, thank you so much indeed for joining me. I'm delighted to be here. It's such a pleasure to work with you all. And keep your comments coming. If you're not watching this live, put your comments there in the comments area. We'd love to hear from you. To each and every single one of you, thank you and goodbye.